Hey everyone, and welcome to the day after one of the craziest days in stock market history. On Wednesday, the overall market went deep green after the tariffs, the reciprocal tariffs were delayed. And that's important to remember because tariffs still exist, 10% across the board unless you're China. At the moment, it's at 125% for China, and Trump actually said that he doesn't see that number go higher for now, right? He's still leaving that door open to talk with Xi, to talk with China about, making a deal. Now, the delay for all the other countries are 90 days, which basically means one full quarter, which also means that in the meantime, it's 10%, so you'll collect that 10%. Now, that 10% still means that for some companies, for some industries, things are still getting more expensive than before. Important to remember, especially as we go into the next earnings report. On Friday, big banks are reporting. By next week, we already have Netflix, TSM, ASML, and then we have the other big ones, the Teslas, the Microsoft, in the weeks after that. So while it is incredible to see this, right? My personal portfolio was up over 15% in just one day. Now, of course, year to date, reality check, year to date, I am still down. The market is still down. I am still down as well. And I would assume most of you are down year to date. Unless you really timed it perfectly, congratulations to you. I'd like to buy your course. Now, this is great. Again, I'm filming this before the market opens, so I don't know what's going to happen by the time this video goes live. I'm actually going to be on a plane, so full disclosure. But let's talk a little bit about, what's next, right? What stocks are worth buying, what stocks are not worth buying, because we are probably right now in the euphoric 24 hours. And so let's come back down to earth, shall we? Now, of course, like I said, right now, the next 90 days are 90 days where 10% tariffs exist, plus we're still going to see whether or not agreements are being made, right? This is the most important thing that's going to happen in the next 19 days, is the United States talking with the likes of Japan, South Korea, Vietnam, the UK, Latin American countries, European countries as well. And then, of course, remember, the big deal, of course, at the end of the day is also going to be reaching a deal and agreement with China, whether it's US and China, maybe US, some European countries, and China remains to be seen. But imagine what's going to happen when we have that headline, when suddenly the US and China are meeting, have reached an agreement. Do we think that the markets go down, or do we think that the markets will go up? I would probably bet my money on the markets going up part, right? So right now, important to note, I'll repeat it again, tariffs are still in place. It's just 10% tariffs across the board for everyone but China. So right now, companies like Apple, for example, are still getting affected, right? Because they're still doing quite a lot of business in China. Now, all the other companies that we've talked about before, right? A Mercado Libre, a New Holdings, for example, even a Grab or C Limited, have always been less affected by this tariff story. The stock maybe not, but a company, definitely. A Meta, a Google, same thing. A SoFi, same thing. Unless, of course, we are going into a recession. Speaking of recession, this was Goldman Sachs Economics Research note at 12:57 p.m. US economics analysts moving to a recession baseline. 73 minutes later, President Trump announces 90-day pause, reverting to our previous non-recession baseline. Quite interesting. Another interesting thing I want to touch on. Jim Cramer tweeting out, best day since '08 if you stay to the course. Oh, really? If you stayed the course, you are saying this now after you said this a couple of days before. Jim Cramer warns of Black Monday market crash over Trump tariffs, rivaling a record 1987 collapse. Just an FYI, in 1987, the Dow Jones fell 22.6% in a day. So, yeah, if you stayed the course, sure, Pinocchio. Oh, one extra thing here regarding presidents tweeting about stocks. This was March 3rd, 2009, Obama. it may be time to buy stocks. What did he say? This was during a brief press conference in the Oval Office with British Prime Minister Gordon Brown. He said the following: "What you are now seeing is profit and earnings ratio starting to get to the point where buying stocks is a potentially good deal if you've got a long-term perspective on it." The president also compared the stock market to presidential campaign tracking polls, arguing that it is a mistake to pay too much attention to the market's fits and starts. If you do so, he said, then you'll probably get your long-term strategy wrong. I mean, some pretty good advice here. Mr. Obama said he judges the success of his policies not on the gyrations of the market, but on indicators such as unemployment, business investment, and the flow of credit. Interesting, right? Interesting. He added that we are going to recover, but it's not going to happen overnight. Of course, back then, well, the great financial crisis just happened. Right now, liquidation day happened a week ago. I mean, Liberation Day, or maybe Liberation Day was delayed by a week because it was last Wednesday and this happened this Wednesday. So yeah, maybe this was an Internet Explorer type of announcement where it was actually delayed by a week. So yeah, interesting things when you dig a little bit deeper and you find some things that were mentioned, well, quite a long time ago, in this case 2009, by another president, in this case Barack Obama. Last data point here is the VIX. So the VIX, the volatility index, actually fell 35% in just one day. Now remember, a couple of days ago we did talk a little bit about what happened to the S&P 500 when the VIX reaches 45 for the first time in a month, and these were the odds that we were playing with. So 75% a day later was green, 83% 2 days later, 83% again 3 days later. So it does seem like we were luckier with the 83% 2 and 3 days later, and then 75, 83, 75% again 4 days, a week, and 2 weeks later. Now, going back to the stock picking part of the video, of course, by now, probably many of us, and myself included, ran out of cash, right? And even if we had cash, maybe now we would like to keep the cash in the cash pile and see how things work out, right? I think that could be one of the scenarios and one of the strategies going forward. Of course, even with this reaction right here, plenty of these stocks, if not all of these stocks, are still down considerably year to date, and plenty of them are still cheap, right? Still cheap. Of course, they were cheaper a day, 2, 3 days ago, but plenty of them are still considered to be cheap. I mean, Google is still under $160, which means the forward PE is still under 20 times at the time of making this video. Now, important point here I want to mention yet again, because although I want to sound bullish, although I do sound very bullish, I have to be realistic as well. Forward PEs will change, okay? Forward PEs will change because the forward PE is based on analyst expectations. And I do strongly believe that analyst expectations across the board are still going to be adjusted on the way down, probably throughout the next earnings season. So if EPS expectations are lower, then the forward PE will start to go higher unless these stocks fall more than the adjusted E, right? Of course, if these stocks go up and the PE, the earnings expectations do not move, then the forward PE will move up as well, as per usual. But it's important to remember that a forward PE, you might look cheap 1 week, and then the next week, after you reported earnings and after all the analysts had the chance to look at everything and look at all their models, and suddenly they adjust it, and suddenly they say, oh, actually, the EPS, our expectations are now going to be 10%, 20% lower because XYZ, and then suddenly that forward PE just went from 20 times to 25 or maybe 30 times. It's definitely a possibility. So it just went from very cheap or cheap to expensive. Okay? Important to note. Now, is this a certain scenario? No, I don't know. This is a possible scenario. So again, what I'm saying to myself is, what type of companies do I want to buy today in order for me to, well, see them grow quite considerably in the future, no matter what. Of course, there's always a possibility of things going very, very wrong. But yeah, when I started to look more into Google, into Metas, into Amazon, into AMD, into all of these other companies, I mean, even Alibaba, believe it or not. Yes, I know Besant said that everything's on the table, even when we talk about maybe delisting Chinese companies, which by the way made me maybe reconsider where I'm buying my Chinese shares, because you can buy it on US markets, you can buy it on European ones, or you can buy it on the Hong Kong one. So you can hold them without having that delisting risk, although I still don't see that happening, but you never know. You never know, okay? You never know. So going forward, my strategy is still the same as it was before. Companies that are strong, that are trading at very attractive prices, companies that will survive this trade war are going to be on my list time and time again. Yesterday or 2 days ago, we actually talked about the companies that, well, can survive tariffs or this tariff war because their business are not directly impacted by the tariffs, right? We've talked about Mercado Libre, right? Latin American companies, for example, not directly impacted by the tariffs. Indirectly, yes. Indirectly, quite a lot of companies are affected by this tariff scenario. But there are plenty of companies that have seen their stock come down quite significantly, yet the tariff risk or the tariff scenario, bad case scenario here, just doesn't make any sense. And so, of course, those names are going to be higher on that list, as I've said before. A SoFi, for example, even a PayPal, yes, that's still quite high on the list because when at under $60 billion, maybe now a bit more, the company is basically buying 10% of the company each and every year with that $6 billion in buybacks, if the market cap stays around $60 billion, that is. So to not sound like a broken record time and time again, buy great companies, good companies at great prices, and you'll sleep much better at night. That's about it. That's the message here. Keep in mind that the tariffs are not gone. Tariffs are still in play. Big tariffs on China as well. And the focus is probably still going to be on the China deal and deals with other countries. We're not fully out of the woods just yet. Important to know. So that's about it. Do let me know what your strategy is down in the comment section below. Like, subscribe, do all of that, and I'll see you all in the next one. Bye-bye.